This is Nightly Business Report with Bill Griffith and Sue Herrera.
The mouse chases the fox. Disney ups its offer for Fox's assets, escalating the bidding war with rival Comcast. Drama in Vienna, why the meeting of global oil producers is shaping up to be one of the most contentious in years. New factory opens. A foreign automaker puts down roots in the United States, but it comes at a rather unusual time. Those stories and more tonight on Nightly Business Report for Wednesday, June 20th. Good evening, everyone. I'm Contessa Brewer. Bill and Sue are off tonight. Disney is raising the stakes in the fight for Fox's assets, now increasing its offer to $71 billion, topping Comcast's all-cash bid of $65 billion. That sent shares of all three companies higher in trading today. And the bidding comes as media companies look to strengthen their own positions against the likes of Netflix. Julia Boorstin is at an advertising conference in Cannes, France, where the fight for Fox was a big topic.
Fox and Disney agreeing to a new, more expensive deal. Disney paying $10 more per share than it had previously agreed to with Fox for a deal worth over $71 billion. Disney's new deal, a 50-50 split between cash and stock, about $6 billion more than Comcast's all-cash offer made last week. Disney CEO Bob Iger saying on an investor call that the company has become more committed to the deal.
Distribution in terms of direct-to-consumer distribution has actually become an even more compelling proposition in the 6 months since we announced the deal. There's just been not only a tremendous amount of development in that space, but clearly the consumer is voting loudly that these new platforms are very compelling.
Iger saying on the call that he's confident the deal will gain regulatory approval and that Disney has a meaningful head start on Comcast.
We've been working with regulatory authorities, not just in the United States, but in jurisdictions across the world now for 6 months. And we've made a lot of progress toward obtaining the regulatory approvals that are necessary.
Disney saying this higher cost deal does not change their plans to invest in Disney's businesses. But that short term, they plan a more conservative approach to share repurchases and will not complete the $20 billion share repurchase announced in December. Rupert Murdoch, executive chairman of 21st Century Fox, saying, quote, "We remain convinced that the combination of 21st Century Fox's iconic assets, brands, and franchises with Disney's will create one of the greatest, most innovative companies in the world. As for what's next, no word back from Comcast on whether it plans to offer more for Fox." For Nightly Business Report, I'm Julia Boorstin in Cannes, France.
The media merger activity lifted the mood on Wall Street, while Netflix and Facebook closed at new highs. But lingering trade tensions weighed on the Dow, and stocks finished mixed. The Dow Jones Industrial Average fell 42 points to 24,657. The Nasdaq rose 55, and the S&P 500 was up 4. Shares of General Electric fell today as the company enters its next chapter. After more than 100 years as a Dow component, GE will be removed from the blue chip index, as we reported last night. During its time as a member of the Dow, GE saw some very high highs and some very low lows.
GE literally changed the world, from light bulbs to locomotives to household appliances, power generation, and jet engines. With a market cap of $594 billion in the year 2000, it was the world's most valuable company. But its removal from the Dow Jones Industrial Index next week is the latest symbol of how far it's fallen.
It's clearly a sign of the difficulties GE has had.
The index has decided that it was irrelevant.
Now valued at $113 billion, GE is still bigger than United Technologies, which is staying in the Dow. But GE's share price is down more than 50% in a year. GE embraced change in the 20th century and grew, developing computer technology. And after Jack Welch took over in 1981, it acquired NBC Universal and later became one of the country's biggest banks. But under Welch's successor, Jeff Immelt, the company stagnated and began to shrink. It shifted away from banking, sold off NBC Universal, and bought oil services giant Baker Hughes, just as oil sank. With John Flannery in charge, its once coveted dividend has been cut in half. No wonder the company barely shrugged when its impending removal from the Dow was announced. GE's statement says we're focused on executing against the plan we've laid out to improve GE's performance. It does nothing to change those commitments or our focus in creating a stronger, simpler GE. Icons like GM and Alcoa have left the Dow and survived. Now investors wonder if GE can find a way to bring itself back to life.
Well, now that General Electric has been removed from the Dow, let's talk about whether that major index is still as representative of the U.S. economy as it once was. We're joined by David Blitzer, who's the managing director and chairman of the index committee at S&P Dow Jones Indices. It's great to see you today.
Good afternoon.
Can you tell me what is behind the change? I mean, why Walgreens?
Well, our change is based on what we feel the index needs and how we will make the index even better and more representative of the U.S. markets and the U.S. economy. So the change is not about General Electric. Looking at the index, it is, with GE, where it is now, somewhat overweighted in industrials. The more industrials represented in the index than would be balanced to the market. Less consumer staple companies, somewhat less healthcare companies, and all that suggested to swap an industrial for something that was in consumer staples or maybe a tinge of healthcare. On top of that, GE's price at about $13 a share has a very low weight in the Dow. It was less than 0.5%. GE wasn't doing very much, was not having much impact on the Dow. So rather than leave it there, let's take the opportunity to balance the index better, add a stock that will have a bigger impact on it. And that's in part or largely because the Dow is price weighted, an unusual way to do indices, but probably the long-time standard way.
And David, when you're talking about which of the 30 companies should make up the Dow, do you also have conversations about whether weighting those companies by share price is still an accurate reflection of the American economy? Is that still the right way for a modern index to run?
Well, clearly in the last week, we've had a lot of those conversations. We do many other indices, including the S&P 500, which is weighted by float market cap, the amount of shares or the value of the shares that are in the market. And that is the more typical way to do it. To change the Dow, we'd be tossing away about 125 years of financial history, longer series of history than just about anybody else has that's consistent, reliable. We'd also have to rejigger it substantially, and it would come out looking very different, and it would probably come out looking a lot more like the S&P 500. So I think we're happy with the way it is. It's not the only way to run an index, but I think it is sort of a tried and true way to run an index.
Do you think that the fact that you're operating the Dow Jones Industrials without a giant like Amazon or Netflix in it still represents the American economy?
Yes, I do. We have a lot of technology representation in it. We have a lot of consumer-oriented representation. So I think we're doing a very good job of representing the U.S. economy and where it looks right now. Amazon, if one looks at the financials and everything, most of their business is retail. It comes from their website. Maybe the exciting stuff for Amazon 10, 15, 20 years from now is all going to be web services. But right now it's a retail company. That's where it belongs. So I think the representation is good. Amazon in the Dow, because of the price weighting, if we added Amazon, it would become the Amazon index, not the Dow index. And I don't think that would serve anybody.
David Blitzer with S&P Dow Jones Indices. Thank you, sir.
Thank you. Have a good evening.
Does GE's removal from the Dow provide a moment of opportunity here for investors to make portfolio changes? We're joined by Chad Morgan-Lander to discuss. He's a portfolio manager at Washington Crossing Advisors. Look, this stock, Chad, is widely held individually in index funds and mutual funds and IRAs. What happens now?
Well, there may be short-term selling pressure as it leaves the index, but overall, for the long run, the company is going to be trading based off of its fundamentals. And the fundamentals for this are somewhat cloudy at this point. This company never really recovered from the Great Recession.
I mean, this is a stock that my grandparents have owned, my parents have owned, I have owned. So what indicators do you look for now to say, yes, hold on to it, no, cut your losses and sell, or now's a great time to get in?
Right. Management has to show that they're keeping it simple, that they're going to reduce debt, they're going to change the properties and perhaps spin a couple of them off. So it's easier for portfolio managers and individual investors to understand the business. That's part of the problem. The business model is too confusing. Yes, the healthcare business is running on full speed, as well as the engine business, the jet engine business, i.e. Boeing. But you also have troubled groups within that property, like, for example, oil and gas. We need to see them spin those troubled groups out, the companies that are not really profitable or are not very predictable.
And what's your advice right now? Sell?
I would
buy?
hold if I was a long-term investor. And if you start to see a transformation of the company, I would be more enticed to buy it at higher prices, knowing that there's stability. They really need to reduce their debt burden. It's over $100 billion.
Thank you so much, Chad, for giving us your expertise.
Thank you, Contessa.
Chad Morganlander with Washington Crossing Advisors. It's time now to take a look at some of today's upgrades and downgrades. Citigroup was upgraded to buy from hold at Deutsche Bank. The analyst says the Fed's stress test results should be positive for the bank. The price target is $76. Shares closed up nearly 1% to $67.38. Starbucks was downgraded by a number of firms here, including Morgan Stanley, which lowered its rating to equal weight from overweight. The analyst points to the company's sales warning. We told you about it yesterday and asks whether management is really doing enough to turn around this business. The price target was cut to $59. The stock dropped 9%, its biggest one-day decline in nearly 6 years. And today, Starbucks CEO admitted the coffee chain's growth has slowed, but he says there's a plan to get things back on track.
At our scale, I think we've got to be much more disciplined in setting our priorities. We've got to be more data-driven in terms of how we're allocating resources and tuning the model. And we've got to be much more agile as innovators. And so what we did yesterday was set the stage for that transition to a company that's really focused on growth at scale.
And as we reported, Starbucks will open fewer stores in the United States while closing many in larger cities. Still ahead, why the price of oil is at the center of a landmark meeting.
I'm Brian Sullivan in Vienna, Austria, and coming up, why the fate of oil prices may be determined by what happens behind the doors of this 700-year-old palace. That's next on Nightly Business Report.
In Washington, President Trump signed an executive order to keep immigrant families together at the border. That order addresses what the White House has called an unwanted side effect of the administration's zero-tolerance policy on illegal immigration.
It's about keeping families together while at the same time being sure that we have a very powerful, very strong border.
The executive order comes just hours after major airlines told government officials they did not want separated children transported on their planes. The meeting of OPEC members and other oil producers is shaping up to be one of the most dramatic in years, and the gathering doesn't start until Friday. Brian Sullivan reports tonight from Vienna.
The amount you pay for gasoline in the future may be decided within the walls of this more than 700-year-old palace in Vienna, Austria. This is where OPEC is holding a two-day seminar ahead of their big general meeting on Friday. And the big issue on the table, whether the OPEC nations will agree to increase output, which could possibly lower oil prices. A year and a half ago, OPEC members agreed to cut production in an effort to firm up prices. That's largely worked, as crude oil has jumped by $10 a barrel since then, and boosted gasoline prices with it. Now Saudi Arabia is pushing to raise production, along with non-OPEC member Russia. This coming on the heels of the Trump administration reportedly requesting Saudi oil support and increased production in a phone call to the kingdom just one day before pulling out of the Iran nuclear deal. Iran, which fears it will be hobbled by upcoming renewed U.S. sanctions, has condemned the move, calling on fellow OPEC members to rebuff Trump's call for increased oil output. They are joined by Venezuela, which is dealing with a disastrous economy and collapsing oil output. Iran's governor to OPEC telling CNBC that if the Saudis and others want to walk away from their current output agreement, it will be like President Trump walking away from the nuclear deal.
What I'm saying is that there is a valid agreement. Everybody should honor it. Anybody wants to walk out, they are most welcome. We are going to stay up to the end of December.
You will honor the current OPEC deal because you believe the deal is in place. What do you think about the people that are trying to change the deal?
Okay, they can do it. They can walk out like Trump.
But it is drivers who may feel it the most if Iran walks away from any deal here. Because as economies around the world improve, demand for gasoline will rise. And unless more oil comes to market, supplies will get tighter. It's why the chairman of American oil company Pioneer Natural Resources tells us he expects a deal will get done.
They will have to, because we're taking off 1 million barrels a day off the market from Venezuela declining, plus the Iranian sanctions. And now you got Libya off 400,000 barrels a day. So they have to add more barrels to the market. And then you got the Permian's going to reach its capacity in the next 3 to 4 months. And so the U.S. is not going to grow as much over the next 12 months. So they have to add some more supply to the market.
The cartel will ultimately announce its decision on Friday. The outcome right now is unknown. But what we do know is that this is already shaping up to be one of the most contentious OPEC meetings in many years. For Nightly Business Report, Brian Sullivan, Vienna, Austria.
Winnebago says demand is growing, and that's where we begin tonight's market focus. The RV maker reported improved margins and stronger than expected earnings as customers purchased RVs from the company's new product lineup. Winnebago said its brands are well positioned to grow and continue to be successful.
We're taking material market share, especially in the towable segment. We have two brands, Grand Design and Winnebago, that are doing really good things. Their product lines are healthy, their relationships with dealers are healthy, and they're able to compete really effectively in the market for their products.
Shares finished up nearly 15% to $46.35. After the bell, chipmaker Micron said strong demand for its smartphone and computer memory chips helped overall sales rise and top expectations. Profits also climbed and beat estimates. But Micron shares were initially lower in after hours and also ended the regular session down just a fraction to $58.95. And American Outdoor Brands, formerly known as Smith & Wesson, reported a drop in profits and sales, but the results were still ahead of estimates. The company also gave strong guidance for the current quarter, but sees performance for the year missing street estimates. Shares initially were higher in after hours and also finished the regular trading day up 1% to $13.23. German automaker Daimler is issuing a profit warning, and it's blaming the U.S.-China trade fight. The company cited the potential for higher costs resulting from increased import tariffs for U.S. vehicles into the Chinese market. It also said Mercedes-Benz SUV sales have been softer than expected. Separately, the Wall Street Journal is reporting that Germany's largest automakers back the idea of abolishing all import tariffs for cars between the European Union and the United States. Volvo is the latest automaker to add an assembly plant in the southern United States, and the facility outside Charleston will build cars and SUVs that will be sold here in the U.S. and exported overseas. Phil LeBeau is in Ridgeville, South Carolina.
I would officially declare the Ridgeville plant open for business. Thank you for coming.
The pre-production work is just getting started, but it won't be long until 4,000 Volvo workers are cranking out finished cars from the company's new plant outside of Charleston.
We need to come closer to customers to be able to continue growing. We need to know how they think and need to know their preferences. So very crucial to be here finally.
Volvo's expansion comes as sales in the U.S. have jumped 40% this year, thanks largely to its popular SUVs. But compared to Europe and China, the U.S. still makes up a small part of Volvo's global business. China is increasingly crucial to the brand's future. Not only is it the world's biggest auto market, but Volvo's parent company, Geely, is a large and prominent Chinese automaker. And then there is the growing trade tensions between the Trump administration and foreign countries who charge far higher tariffs on imported vehicles than the U.S., a situation the president is pushing hard to change. Volvo CEO says more uniform auto tariffs would ease the trade tensions.
I think it was very good. China lowered their tariffs some week ago. Now they're back up. And the European Union also, I think, should follow America on a low level. So if we would do that, I think the whole business would be more strong and the consumers would have better products.
Right now, the majority of vehicles Volvo sells in the United States are imported from Europe, with the remainder coming from China. But once this plant is up and running, many of the vehicles it builds will not only be sold in the United States, but will also be exported. And in the process, a brand intent on making a bigger impression with Americans will become the latest foreign automaker to put down roots in the Deep South. Phil LeBeau, Nightly Business Report, Ridgeville, South Carolina.
Coming up, planning a trip for this summer? Watch out for travel fraud. It's on the rise, and it's costly. Sales of existing homes fell for the second straight month thanks to a shortage of properties on the market. The lack of supply pushed the median price of a home to an all-time high. And while sales fell nationally last month, they are red hot on the tiny island of Nantucket. This vacation spot off the coast of Massachusetts is seeing record prices amid increasing demand. Diana Olick has more.
This 60-year-old home on the edge of Nantucket Harbor is considered a teardown with a list price of $24 million. That's just how much money is pulling into port on this historic island. The property has been in real estate agent Edward Sanford's family for decades.
In the very high end of the market where this house is, buyers don't care about the house. They're looking for the location. We see perfectly good brand new houses gutted. And because the buyer wants his vision, he has the money.
With ultra high-end restaurants and retail crowding into the cobblestone streets, Nantucket real estate is reaping the rewards of a robust economy. The dollar volume of island homes sold in the first quarter of this year was up nearly 50% compared to a year ago. The $4 to $6 million range is the sweet spot, with sales up 300% compared to a year ago, all according to Great Point Properties.
When the markets are good, and I mean the equity markets, people are obviously getting richer, making more money, and so they're more inclined to want to, spend some of that on Nantucket.
And there is little left for sale on the lower end of the market here. There are currently more listings of homes priced over $10 million than there are homes priced under $1 million. And while builders here are busy, there isn't much land to build on, so they're focused on the high end where they profit most. Not only is the value of the limited land here growing exponentially, but docks like this one are adding to that value as well, because Nantucket no longer allows any more docks to be built here anywhere, ever. This dock just across the harbor recently sold for nearly $5 million. Demand is largely domestic, buyers from Boston, New York, and Texas, so it helps that the island's property taxes are incredibly low. Just one more reason real estate here is sitting pretty. For Nightly Business Report, I'm Diana Olick on Nantucket.
Well, if you're hoping to book a getaway to Nantucket or anywhere else at a discount price on short notice, the combination could make you the perfect target to get scammed. Senior personal finance correspondent Sharon Epperson is here with tips on how to protect yourself and your valuable vacation time from travel fraud. I mean, how big an issue is travel fraud?
Travel fraud is on the rise, and it's become a very big issue. A recent study showed that 55 million bookings per year are done on a fraudulent online website, travel website, or through a fake hotel website. So it is something that has risen 16% in 2017, and it's had a significant impact on consumers and on the travel industry. We're talking about the average consumer. The fraud loss is between $300 and over $500. And we're also looking at airlines losing between $2 to nearly $5 billion a year to credit card fraud. If you're booking your hotel on the same day, thinking you're going to get a great deal, you're 4 times more likely to be a victim of fraud.
So I mentioned that if you're looking for that deal, it makes you more vulnerable to it. What are the red flags you're looking for to know whether you're about to get hooked?
Well, you get that suspicious email that says, you can get a great discount on this airline or this resort, but there's not a lot of details attached to it. Or the biggest one, it's going to be free, but it doesn't give you a date. It doesn't really give you a name of the location of where this property is going to be. That's another warning sign to look out for. The other thing to look for is if you're pressured to do it right now, pay up front, and you're going to get this great offer, that is something that you really want to be wary of, because that's in order to get your credit card number and get you to sign up right away, another form of fraud. And finally, you want to be sure that you're looking at currency exchanges when you're traveling abroad. People think, I got to just exchange this money quickly, I'm going to use a storefront to do it. That is not where you want to go. Likely going to get scammed there. You want to go to a bank.
All right, and what do you do if you spot a scam?
If you spot a scam, make sure you get all the things in writing. That's how you can avoid it. That's one of the first steps to always take. And don't make one payment until you've seen it in writing. Make sure that you're reading the fine print, and make sure that you review it immediately, because you only have 60 days, according to the Federal Trade Commission, to dispute a credit card charge from the first time it appears on your bill. So if you've made this booking months in advance and then discover later that there's something wrong there, you may be ripped off and unable to get your money back.
Plus, how do you explain it to your family, Sharon?
Exactly.
Thank you, Sharon Epperson. And before we go, we want another look at the day on Wall Street. The Dow fell 42 points. The NASDAQ rose 55, and the S&P 500 was up 4 points. And that's Nightly Business Report for tonight. I'm Contessa Brewer. Thank you for watching. Have a great evening. We'll see you back here tomorrow.